Thanks for tuning in to the Everyday Real Estate Investor podcast, where we talk to everyday people that are out there doing the real estate investment thing. Again, our goal is to encourage you, if you're busy, to not write off investment in real estate as something that you can't do, right? Because a lot of people think it takes a lot of time. It does, but you can definitely incorporate it in your life, even if you're busy with other things. And so today we have Dan Hayes with Real Property Management Solutions here, and we're going to talk to Dan about what he does in his business and how he's been able to incorporate real estate investing in that as well. So thanks for being here, Dan.
You're welcome, Ben. Glad to be here.
Awesome. Well, tell us a bit about just really quick, like a 60-second synopsis of your journey and kind of where you started and what you do, and just give us a run through of your journey. Where did you start in your business and in your investing, and where are you today, and how'd you get there?
Yeah, no, I'm happy to answer that question. Probably a lot like a lot of people, spent many years in the corporate world, wanted to put my money to work, and I've always wanted to own my own business. Read the book Rich Dad Poor Dad, which is kind of the gateway for all of us, I think. And
yeah, a lot of us.
and thought, well, heck, why couldn't I buy a few rental properties as a way to invest in my future? Perhaps have a bit more control as my corporate career started to sunset. And I can remember it like it was yesterday. I was sitting in the driveway talking to a real estate broker about buying a couple of triplexes, and it was literally all chips in the middle of the table.
Mm-hmm.
And she said, trust me, do it. And boy, she was right. And of course, now we own a number of rental properties that kick off an impressive amount of cash flow. And frankly, I retired from a really good job much earlier than most. And I can honestly say it's because I started buying rental properties when I was too busy to buy rental properties.
Right.
And,
yeah. If you wait till you're not until you have the time, right? You're probably never going to buy anything.
Yeah. I'm often asked, is now a good time to buy real estate? My answer is yes.
Yeah.
And it really doesn't matter what day.
When's the best time to buy? 10 years ago, right?
Exactly.
When's the second best time to buy now, right?
Yeah. That's right. And so now we have a portfolio of around $8 million that we own, and I'm sure we'll talk about it later, but I retired and decided to start a family-owned and operated residential property management business just because it was a great synergistic fit, and we managed just around 1,000 units across the 3-county area.
Awesome. Yeah. Okay. Yeah. That answers. I was going to get into the chicken versus the egg thing, right? So, like, what came first? Was it rental properties, or was it the management?
It was
side?
definitely buying rental properties. I
Okay.
mean, as I started doing well in my career, and I wanted to really make sure I put that money to work in the most effective way for an average guy like me. Honestly, I mean, there are a number of places you can put your money, but the stock market isn't something that interests me. I know me well enough to know I'm not going to spend a lot of time studying the stock market.
Yeah,
it's not something that appealed to me. As I said, I've always wanted to own my own business, and owning real estate, residential rental, and some commercial rental real estate satisfies both of those needs that I have, which is it's a business. I look at it as a business. I look at my cash flow statement every single month. I look at the P&L just like I look at a business P&L. But I can drive by that property. I can see it. I can affect it. I can't go to the board of directors at Walmart, right, and talk about their performance if I own Walmart stock. Now, Walmart stock's not.
I mean, you could. They're probably not going to listen.
They probably wouldn't do much, but yeah, I love the tangible nature of owning real estate.
Yeah,
I really, really do.
Yeah.
And if you can get your machine, what I call the machine in place.
Yeah.
Get your model right.
Mm-hmm.
You can replicate over and over and over again.
Yeah.
You and I were talking about a property I just purchased. If you walk into that property, it's going to look almost exactly the same as the duplex I built last year. Colors, flooring, appliances. It's a machine. It's a blueprint. It's a process that we can replicate quickly.
That's a very good point. I think that's something that people aren't maybe aware of when they jump into it. They just start buying stuff, right? And those systems and processes really help shortcut a lot of that stuff. It makes it easier when you have to do repairs or whatever, you
Yeah,
just
it's
you
all-
already
it's
know
all
what's
about
there. You know,
efficiency,
which
that's right.
property is that, and what paint colors does it have to go touch up, all that stuff.
That's
Right?
right.
It's already
Less paint
figured out.
cans in the garage. is
Yeah,
better.
oh, that's true too. Yeah,
Yeah, that's right.
yeah. How do you get rid of all those extra paint cans and
Paint one
and
color.
yeah, you paint one color, right?
That's right.
So there you go, there you go. Awesome. So I talk a lot about the need to build a good team.
Mhm.
So that's one of the things. If you're trying to do everything by yourself, I'm not against that. I started with that. I did swinging the hammer and all that stuff. I know you do some of that still too, just to keep busy or whatever. But
It's my exercise.
yeah, there you go.
program.
There you go. But especially if you're busy, you have another business, you have a family, maybe you're a stay-at-home parent or something like that, or you have a professional career that you like, but you also want to invest in real estate. It's really hard to do that if you don't have a good team, right? So
Completely agree.
yeah, so in property manager is one of the biggest ones. So talk about that as far as you are a property manager, and you've, I'm sure, hired other property managers before you had one, right? So
That's right.
what should someone look for in a property manager when they're interviewing a property manager?
Well, certainly that's an important question, but if we could, because you touched on something that I think is super important.
Okay.
And as you know, I teach classes on this topic as well. And when I teach my beginner's class, if you will, on investing in real estate, I start with the notion of plan your work and work your plan. Like, don't do anything until you do that. And when I think about creating a plan, I think about it in this way. What is it that you want this asset to do? Because you're about to plunk down quite a bit of money. Like, there's no getting around it. You're going to have some capital available to buy that property. And before you do that, spend some time thinking about, well, what do I want it to do? And when do I want it to do it? Do I want it to pay for a college degree 20 years from now? Do I want $2,000 cash flow in the next year? Answer those really important questions and then assemble your team.
Yeah.
And my rule when it comes to assembling a team, and it absolutely is a property manager, but it's beyond that. It's who your real estate broker is, such as yourself.
Yeah.
Who is your insurance resource? Who's your legal resource?
Mm-hmm.
Who's your tax resource? And if you can't go to that team, assemble that team and say, hey, this is what I want to do, and this is when I want it to do what I'm planning, that team can effectively help you.
Right.
But when you can go to that CPA and say, hey, this is what I'm trying to accomplish, that tax expert's going to be able to say to you, all right, well, think about these tax strategies. Like, I've made 2 big moves in the last 2 months. The first person I talked to before I did that was my tax professional.
Yeah.
Because I wanted to do it in such a way. Because when you look at taxes, that's actually your biggest expense. So how can you mitigate that? So assembling your team is actually everything. And then that team goes to work on your behalf. And your ability to be successful based on that exponential growth of yourself, if you will, by having people around you is critical.
Yeah.
When it comes to property management, here's what I'd say about property management, and really any member of my team. My CPA owns rental properties. My real estate broker that I've worked with owns rental properties. My insurance broker owns rental properties. It's a bit of a rule that I have that you either own rental properties or you.
I think Robert Kiyosaki influenced you on that, wasn't he? Wasn't it him that said?
Yeah, that's right.
Yep.
And the reason why is because who's going to know more about the tax advantages of owning real estate
Than other real estate,
than a
yeah,
tax
yep.
professional who owns rental real estate?
Exactly. They're a little more motivated to understand
Correct.
the tax code, right? Because
That's right.
they're like, it benefits them, right? Versus just knowing it to help
That's
a
right.
client. Not that they don't want to help a client, but it's just different experiencing it as an owner in real estate versus
That's right.
just
Yeah.
telling someone about it. Yeah.
As an example, I
Yeah.
went through 3 tax professionals when I first got started, and I just simply asked a question. And that question was, how do you feel about segmented depreciation?
Right.
And
if you see
if
the
you look
eyes
at me,
glaze over, then
that
it's
is
like,
okay,
nope.
you're not my tax professional.
yeah.
That's right. Yeah.
Oh
But
man,
you're-
we'll try not to go down that
That's right.
rabbit hole this time,
Yeah.
but that's an amazing tool. I've used that a couple times.
That's
It's
right.
like it's amazing. What
It's
it can do
amazing.
for your tax.
That's right.
Your tax outcome. Yeah.
And your real estate tax professional designation.
Yeah.
But for someone like you who has a successful rental business, your ability to advise your clients in that real estate transaction is far and away better, I believe, than someone who doesn't. And it's not that they're not capable.
Right.
It's just, you need to know how it works to advise that person. And
I
that's how you
100% agree.
do.
Yeah. It's really easy to say, and this is not a bash against other real estate agents or
No.
anything, but if you're saying something's a good investment, you should actually understand why it's a good
Correct.
investment. Or it's really easy to type that into a listing,
That's right.
and not really understand. Well, it seems like a good investment, but I really don't know why. Can
That's
you
right,
explain
yeah.
why it's a good
Yeah.
investment, right? So
Right.
that's
And
the
plus,
biggest thing.
if somebody came to you and said, "Hey, Ben, find me a great rental property," that's great to say, but you'd like to understand a little bit more about what is it they want this to do,
Exactly.
and when do you want, and then you can.
And that's where we all
That's right.
that's where we start with our clients for sure is understanding their goals and needs, and because otherwise you can't build a plan around creating that for them, right? So and I think kind of going back to that concept really quick, that's what I always say too. Like so many people have gotten into this business. You've got accidental landlords. I owned a property, I couldn't sell it, so I decided to rent it or whatever, right? So there's nothing wrong with getting in it. At least you're in the game, right? But a lot of people start out without thinking that through. What are they really trying to accomplish? And when I think if you get into the business that way, it's really easy to just kind of continue in that way. And you hear a lot of people, "Hey, I'm looking for a deal." Well, okay, well, what's the deal to you? What's the deal to you? Well, it's anything that makes money. Okay, well, that's not helpful to you or to me. Like I can't help you find that if I don't know what I'm looking for, right? So I'm going to be sending you, hundreds of properties, and it's going to waste your time, right? So and then you don't even know when you're looking at it if it's even if you want to buy it. So you have to define that. And so many people start with like just looking at properties instead of starting with what's my goal and the result that I'm after. Yep. So I always say, your goals, your strategy, your market, your team, and then the property. I stole that kind of from the real estate guys. They're the ones that taught me that on their podcast, but and from their meetings that I've been to. But I think it's
a great principle.
Yeah, it's a great way to do it. Yeah, absolutely.
Yeah,
So tell me about some mistakes you made. I mean, maybe that's an assumption, so maybe you've never made any mistakes, but
no, yeah, I wish. It would be easy to say, well, one of the mistakes I made is I didn't get started sooner.
Right. That's
of course. That's the easy one. But I think there are a few mistakes. One of the mistakes I made early on is not understanding the balance between how much to invest in that asset and how much to hold back. Meaning, you can over improve a rental property.
Oh, for sure.
Right. So that will cost you money that will be difficult to get back in a return.
That's a good one.
And I've made that mistake.
I've made that mistake as well. Yeah.
I'm not going to live in that property.
Right.
But it's not just a rental property. It's a business. It's an asset. So striking that balance. And on the flip side, in fact, one of the first major remodels that I did was on these two triplexes. And I put the absolute cheapest appliances I could find. And I have regretted that decision to this day. Because now that appliances costs are through the roof and hard to get. I believe that the best approach is to balance what your ideal tenant base desires. What are they willing to pay for? And it's different by neighborhood. It's different by asset class. And what is it they value? Because those are your customers. That's your market. What do they value? What are they willing to pay for? And then deliver on that in a way that has the best return for you.
And I'm going to guess that a good property manager is probably going to be able to help give you that information, right?
You
talk to a property manager, like, this is what our clients are paying for, this is what they want, right?
Correct, that's right. And one of the most challenging calls I get as recently as yesterday is when a potential client will call me and say, "Hey, Dan, we close on this unit in 2 weeks' time. What do you think I could rent it for?" Excuse me. And
late in the game.
That's backwards.
Yeah.
And if you don't like the answer, it's problematic. The very best call I get is, "Dan, we're thinking about buying in this area. What are your thoughts? What are the trends? What are vacancy rates?
Yes.
And would you be willing to run a rental analysis and even visit the property with me before we make an offer?" My answer is yes and yes. And
That's hard to do in today's market, but yeah.
Hard to do, but
you can do
but
some of it
still,
though. You can at
do some
least
of it. Yeah,
get
that's
you
right.
can get the general idea, right?
That's right.
Yeah, the neighborhood. Yeah, that's 100. I absolutely agree with that.
And if you can't get there before the offer, but that's fine. But you ought not make that offer until you have a general idea of what the rent per square foot is going to be for
Right.
for a unit of that asset, that class. In that neighborhood, that's 30,000 foot level of analysis.
Right.
So if it works at 30,000 feet, then you start to dig in deeper, and if it still works, then you're really on.
Right, and you can give feedback like, oh, that neighborhood, we're getting multiple applications the first weekend,
That's right.
and the rents have gone up 10% in the last 12 months.
That's right.
Or versus like, oh, that area, rents have been trending down, and we have our
Correct.
applications are slower and all that stuff.
And there are a number of tools to do that. I mean, when I walk into a unit, I already know what the average rent per square foot is going to be for that neighborhood. I already know what the vacancy rates are for that neighborhood. I've already plugged that into a very simple one-page pro forma. It's too easy to not do that.
Yeah.
And I can say that I've never made the mistake of investing in a property that underdelivered, because I just value my money more than that. and I do that. If I can't do enough due diligence to make the right decision based on the information available to me, if the market's too hot, then I'm not going to participate.
Right.
I'm just not going to make that mistake.
Yep.
I'll make other mistakes, but that one I'm not going to make.
Well, so when you're looking at a property, for listeners, maybe this is too much for to get into, but are you able to do, because you don't have a whiteboard or anything, can you give a quick idea of like when you're looking at something? No, we'll go back to everybody should look at what they're after,
Right.
before they start running some formulas. They shouldn't just copy and paste yours necessarily, but it's a good place to start. So, what do you look at as general numbers to say, okay, I might want to take a closer look at this, or to quickly disqualify something?
Yeah, no, I think it's a very important question, and it actually, I call it you've got to have a back of the envelope math.
So the 1% rule, or no?
Well, here's the thing.
That's a
If
tough
you're-
one
if
now.
you're-
That's
if
an
you
oldie,
invest
right?
in- yeah, if you invest in Portland, Oregon, 1% rule is going to be tough for
Yeah,
you.
you're never buying anything.
You're not
pretty
gonna,
much.
you're not gonna do, and I think you'll miss some opportunities.
100. Yeah. And I think I think that's important for people, because you see that still everywhere on the internet, right? And all the 1% rule. I'm supposed to hit the 1% rule.
Yeah.
And I'm not saying there's markets that don't deliver that, but if you're unaware of like your market, whatever market you're looking in, and again, it goes back to what are your goals and all that too. But if you're just taking a rule like that and just trying to plug it into a market, you may never buy.
You may never
right?
buy.
Yeah.
And
you can get frustrated. Like nothing works.
Yeah.
Nothing works while you're using the wrong parameters, right?
You're using the wrong parameters and perhaps not thinking long term enough.
Good point.
I mean, if I were to
Good
use
point.
the 1% rule on some of the properties that are in my portfolio, I wouldn't have purchased them, and I wouldn't have near the success that I have today.
Yeah.
So it's a great rule. It's not the only rule.
Right. There you go.
What
Yep.
I do, anyway, the 1% rule is obvious. It's pretty straightforward and easy to do. But what I do is, as I said, I have a general idea of what the rent per square foot is, or average rents for that particular town for that bedroom count, and whether it's single family or multifamily. And that's just, again, 30,000 feet. That gives me my annual gross income pretty fast.
Mm-hmm.
Everybody you can get to a vacancy rate pretty quickly. So in one quick tap of a calculator, I can get to an effective gross annual income for a property without running a rental analysis, without looking at anything. I know that the average rents for that 3-bedroom unit is, let's say, $1,800 a month. I know that vacancy rates in that town are 4%. I now have my effective gross income just like that.
Yep.
If it's anything close to normal, you're going to have an operating expense ratio between 35 and 40%. And that's just the second calculation. Now I've got my net operating income. All I have to do is figure out debt service, and I know if it cash flow is positive, negative, or break even.
And what do you suggest doing?
Was that it? Yeah.
Do you ever recommend negative cash flow?
I don't. Yeah. If you can't see a pathway out of negative cash flow in year one, don't buy that.
And I was gonna clarify that. obviously if you're doing something that's a value add
Yeah.
or something like that,
That's different.
adding a unit or bit like, yeah, you're gonna have negative cash flow initially.
Yeah.
But yeah, you have to have a plan
A
to
path,
get out
yeah.
of that. Yeah.
My benchmarkers, my benchmarks are simple right now. 4% vacancy rate, 35% expense ratio. I need a 5 cap rate or a 14 gross rent multiplier.
Okay.
And if I have to have a pathway to that. If it's
For those
not,
of you that don't know all those parameters, I'll put something up
Yeah.
to run through those
yeah,
really
and
quick.
cap
Yeah.
rates are tough on the single family, small multifamily side of things because cap rate includes expenses. Gross rent multiplier is much better, I think, for if you're going to look at single family or small multifamily. Cap rate and cost per unit is a much better metric for
Yeah.
larger multifamily.
Yeah.
But that those have been my benchmarks forever. It's a 35% expense ratio, 5 cap rate, 14 gross rent multiplier. And if I can't get that in day one, I want to make sure I can get to it in day 365.
Great.
Or I'm just going to move on to the next asset.
Yeah, there you go. No, that's great. That's a good place to start for sure. Yeah, and I think that's the point of that that I want to get at is that you need to have some sort of, again, going back to what do you want,
And when you want it.
and when you want it,
Yeah.
you have to have some parameters that you know will get you there, and have to be able to do a quick analysis before you dive deep into something, right?
Especially in a market
Otherwise,
like this.
you can't spend an hour analyzing every property. You gotta have a 5-minute
go.
deal or whatever or less, and say yes or no. This is worth looking at more closely, or it's not, right?
Yeah, or shoot an offer.
Yeah, right,
You know,
yeah.
Shoot. I mean, make lots of offers.
Yep.
Swing that bat. Eventually, you'll connect, if you
Yep.
will.
For sure.
The one thing that I've never counted on, I count it, but I don't count on it, and that's appreciation.
Right.
If you make appreciation, if appreciation is necessary to make the deal work, go find a financial planner and tell them you're the riskiest investor they've ever found, and they'll love you. But yeah, I don't. I count appreciation, but I don't count.
Yeah, and I think you can position yourself in markets that have a greater chance of that.
Sure.
But yeah, absolutely.
Yeah.
Like we're and we'll get into this in a second with interest rates and everything. I want to hear your take on that. But yeah, I remember being approached years and years before the bubble burst. The first, last time in 2006-8 time frame. People were, oh, you just buy it, you negative cash flow it, and
It'll be
feed
fine.
it, and then
Yeah.
you just in 2 years you refinance and you got all this equity, and it's like that obviously didn't
How'd
work
that
out
work
for
out?
a lot of
That's
people.
right, that's
So
right. Yeah, that's right.
yeah, I totally agree, and that's where if you're buying and you're breaking even, or you're feeding it, and your whole hope is appreciation. Yeah, it's a risky
That'll be
game.
tough. Yeah.
It's a risky
Now, of
game,
course,
so.
it's different if you say, look, I'm going to buy this asset, I'm going to hold it for 15 years, and you count on a historical appreciation trend.
Sure.
That's okay.
And also, if you're forcing some equity, that's different too,
Yeah, that's
right?
different
If you're
too, yeah.
if you're
That's right.
adding units or doing a remodel or doing something to make that appreciation happen, but if you're just relying on the market to do it, then
That's tough.
you don't have control over that. So speaking of, rates are going up a lot.
Yeah.
Market's still tight, at least here in Portland. I think in most places that are major metro areas. What do you see happening in your, I guess, both from the investment space and your experience and in the rental market right now? Is that being affected by what's going on in the rate world and everything else? And then where do you see things going? Get your crystal ball out here.
Yeah, sure. I'll do my best. I'm not an interest rate expert. I can tell you what my thoughts are, of course, based on my experience, but I'll break it up into two things. One, on the property management side of things, we are very bullish in terms of our industry's prospect over the next 3 to 5 years. As interest rates rise, it's clearly obvious that folks are going to have to continue to rent. Supply continues to be constricted. It's gonna be a while before we have the supply-demand balance in place. So we think being in the management side of things is a very good idea. We see a lot of upside to it. The second thing I will say is, last year we had more units fall out of the business due to folks selling and getting out of the business. It was the most units that we lost in any one year because people pulled the ripcord, if you will. And why wouldn't you? You know, when you have an administration, and it's not a political statement, but when you have an administration that threatens to increase capital gains and eliminate 1031 exchanges, at the same time that you have record low interest rates and record high home prices, anybody who's been sitting on the sidelines for the right time to sell,
feels like
sold.
a good.
Correct.
Yeah,
That's right.
Yeah.
So a lot of calls,
especially long-term owners that are like,
sure.
I was thinking about
Time
getting
to
out
do it.
anyway.
Yeah.
Yeah.
So we think that's going to slow down, and we're already seeing that slow down quite a bit. Rents in the United States were up almost 18% last year. Oregon,
Wow.
Oregon finished up 11. Portland finished
That's
up around 8.
crazy.
But Portland metro markets like Beaverton, Lake Oswego, Wilsonville, 25%.
Wow. Yeah.
That's
Same thing
not,
with prices.
That's not sustainable, and that won't continue. But I think that we'll see mid to high single digits in Oregon again.
Yeah.
For this year.
Yeah, which is probably, I don't know that number is, high single digits is hard to sustain as well, but
It is.
But 25%, like some of the outer markets and some of, you look at Phoenix and you look at, some of these
Miami,
other,
Bend,
Las Vegas, and like
Boise,
a lot of these, where they're
yeah.
getting 20 to 30%,
Right.
And some of those markets multiple years in a row.
Multiple years. Ago.
Again, if that's your pro forma,
Don't do that. Don't do that. I would take a more moderate approach, and if it happens, great.
Yeah.
But because that pendulum will swing too.
Right. Yeah.
But on the property management side, we're very bullish. We think that the interest rate impact will mean less people getting out of the business to sell and take advantage of the record high home prices. It will still occur, but I don't think at the rate that we've seen. We also think there will be less people getting into the rental business. When we look at our lead generation, our prospect contact, and our close rate, we just see a trend that suggests that less people are actually getting into the rental business. Now, in our area, it could be a function of interest rates, and we think to some degree that it will be. But it's also legislation, rules, and things like that. It's a pretty tough state to operate in. So, on the investment side of things, it just means you're going to have to probably continue to look really hard for good deals. When you have I don't know what the rates were yesterday, but I think we're upwards of 5.5–6% for owner-occupied loans. I haven't looked at what a non-owner-occupied Fannie Mae is.
They're up there.
Up there. Yeah. So you're being able to understand what rents have done, how much you have to put down with that high interest rate to be cash flow neutral. Right. It's going to change.
Right. Yeah.
So you can't just buy anything. And it works. Right.
You can if you just put a whole bunch of money down.
but
then your return is terrible. Yeah.
It does. The returns is what matters, right?
Yeah.
I also think we'll start to see. I've seen duplexes, triplexes sell for cap rates under 4. I sold a triplex the month before the pandemic really hit for a cap rate less than 3.5. That is going to change too. I think you're now going to see cap rates begin to inch up.
And I think that's
6,
a function
7, 8,
of financing, right? Like how can you get 5.5% interest rate loans and buy at a 3 cap? It doesn't work. Yeah,
it does not work.
Yeah.
So I think that's what's going to happen in terms of the interest rate impacts. I've read a few articles that perhaps the Fed is way behind the curve, and they're really pushing hard to catch up, obviously, and they may overcorrect. We're not going to know that, obviously, for a while. So I think we're in, not to be the master of the obvious, but we are just in for some turbulent times for the next 12 to 24 months.
Yeah.
We just are.
Yeah, and not to go down that rabbit hole either, but it's our system is set up on people pulling levers, right?
Correct.
And manipulation, if
Correct.
you want to use the right word, I guess, for it. You're not letting something, that's not necessarily a negative word, quote unquote, but you're not letting something naturally work its way out. You're manipulating it, right? So, and that's what they've done with interest rates. That's how they kept us out of the,
Correct.
COVID crash or whatever,
Right.
or brought us back from it. And in the end, what kind of repercussions is that going to have, right?
I think the other thing that has to happen for us to really to be in a better place is that material costs have to come down.
Yeah.
You know, you and I have talked about some of the stuff I've built over the last couple of years. Last year when we delivered that duplex, the lumber prices were astronomically above what we budgeted.
Yeah.
And they've come down, but not to the degree that we need them to.
Right.
We need them to.
Right.
And labor is so short right now. We've got to have some balance somewhere in order for us to really get ourselves into a spot where things are going.
Yeah.
Good.
Yeah, and that makes it challenging to build I mean, we're talking investment, but I mean, as far as housing supply as a whole, how do you create more housing when there's no labor or very expensive labor
Very
and
difficult.
lumber and material costs and all that stuff? It's just,
That's why
you can't deliver a product
That's right.
that makes sense unless land costs go down, which they're not, because it's hard to get land that's developable and all that stuff. So not to,
But all this complexity and all this volatility is another reason why I love this business.
Yes.
You know, if you can have a business that goes through 2 years of a global pandemic and come out the other side relatively unscathed,
Yeah.
and then experience the spring of 2021 where rents spiked and we have an entirely new threshold, it's just a resilient business if you know how to build that portfolio that's got kind of a moat around it.
Yeah.
Which to me that means your loan to value ratio, it can't be over leveraged. You got to have a healthy loan to value ratio so that you can weather the storm. I mean, you and I have talked about this as well. I had a number of tenants that couldn't pay rent. I had one tenant that didn't pay for a year and a half. Thank goodness my reserves were in place, and that I have a loan to value ratio that's healthy, and we just weathered the storm until we got through it, and we got through it. But that, I think, is the other thing that we've got. What you really should think about is, what does that look like for you and your portfolio now?
Yeah.
And make sure you've got that moat in place so that you're protected no matter what the market may do.
Yeah. Yeah, and I'll just touch on so that reserves thing, right? That's a hard, like, it's prudent to have reserves, but it also kind of hurts, right? Because it's like you want to put that money to work and it's just sitting there, but it's the right thing to do.
Just
and
decide,
obviously, what if you didn't have that?
Yeah,
right?
You got to decide how long you may have to hold your breath.
Yeah.
And then
just nobody saw COVID coming, right? So I mean,
there are extremes, and you never want to manage necessarily to the extremes, but you want to be able to hold your breath for a period of time. And if it gets really rough, is there a resource you can go to maybe hold your breath a little bit longer?
Yep.
And if you've got that, I think you're going to be okay.
Yep. Well, last question for you, real quick, and we kind of touched on some of it in the last bit, but what are some of the biggest challenges, or what do you think is the biggest challenge that you see in our current market for investors? And then what's maybe the biggest opportunity?
I think the biggest challenge right now is getting that initial investment done. Like, if you're just getting started, or perhaps you've got 1 or 2 rental properties and you've always dreamed of growing your portfolio. In this market, with record high home prices and now interest rates in a correction period, getting started is going to be the challenge. And as you said, you can make anything cash flow neutral or positive depending on how much you're willing to put down. That's going to be that's tougher to do. So getting started now is going to require that you do an awful lot of work. And we're coming right back to the very beginning of our conversation, which is having the right team. And if you've got somebody, and again, this is your podcast, but and I appreciate you both as a professional and an associate. But having somebody like you on your team that can help you go find that asset that works for you is everything. And being prepared, that saying of opportunity and preparedness meet could not be more true.
Very true. Very true.
And one of the things that I've worked on over the last 2 years is taking advantage of record low interest rates to raise capital, so I'm prepared for the opportunity, which is now very few and far between.
Right.
Which is why I was so excited when I got that phone call in October about this single family home where somebody needed help getting out of the deal, and it was a win-win. I solved their problem. We picked up an asset at a really good price, and we're killing it. It's because we knew what we wanted, We knew what we were willing to do, we knew what we wanted to do, and we had the capital ready to go, and we were prepared. And
Exactly.
boom, who knows when you're gonna get that phone call at 10 o'clock in the morning, and by the end of the day, you had the deal
Right.
locked up.
Yeah, hard to do if you don't know what you're looking for, right?
Correct,
Yeah.
that's right. And that's how it's gonna be for a while. They're just not gonna be, these deals that work are not gonna be everywhere. It's going to come, because that, again, that pendulum swings both ways. But right now, the biggest challenge is getting that first deal done. Where I think some of the opportunity is, I'll tell you where the opportunity is in this market. I talked about it at the class I did. Everybody knows that the rule of thumb, more doors under one roof, the better the cash flow. That's still true.
Yep.
But one of the things that I think people are not paying attention to is this. Take a look at what's been largely delivered in terms of inventory in this area. We have more studio and one bedroom units than we know what to do with.
Mm-hmm.
Next after that is two bedroom. There was a report that just came out from Multifamily Northwest, an economic research firm did a study, and I can anecdotally tell you this is true. It's estimated that nearly 4,000 single-family rental units were lost in the Portland metro market in the last 3 years.
Interesting.
Think
Wow,
about
that's
that.
a lot.
4,000 single.
I should know that. But.
Yeah, 4,000 single-family residence units were lost, and that's because mom and pop landlords have
Right.
decided. And I can
Mhm.
again, I will tell you that
That happened.
that
yeah.
happened.
Mm-hmm.
We have absolutely not replaced that inventory.
Mm.
The inventory that has been replaced, or excuse me, that has been delivered is that studio 1 and 2 bedroom units.
Yep.
You give me a 3-bedroom, 4-bedroom single family home for rent, I'm not sure where the top price is. It's that robust.
Yeah. Wow.
So, we look at a lot, we say, well, can I split the lot? Can I put another unit there? Can I put an ADU in the backyard like you and I have worked on? That's all still good too. Can I take a lot and build 8 units?
And that's what I was going to say too earlier. That's the opportunity I see is
That is an opportunity.
understanding where to add that value and where, I mean,
Correct.
here in the Portland and Oregon as a whole, a lot of stuff has changed with zoning.
Zoning.
And,
Look at
and
that.
a couple House bills, Senate bills that have come through, and so that's a huge opportunity. So whether if you're in Portland or any of the Oregon metro areas, Salem, definitely look at that. But even if you're not, look at your local jurisdiction and what they're doing. They're probably doing things that are going to provide opportunity.
Building density is a huge opportunity,
Yep.
but here's in my opinion, my pro tip of the day. If you look at a 3-bedroom unit and you run your rental analysis and you look at the price and you think, oh gosh, I'm cash flow negative, do yourself a favor and see what it would look like if it were 4-bedroom. Or run it, if you find a 2-bedroom unit and you run the rental analysis and you see that it doesn't quite work, what would it look like if you added a 3rd bedroom? We had a massive collapse of households in the first several months of the pandemic.
Mm-hmm.
In 2021, the US reached a new peak of new households. We had an explosion of households. That means there's not enough houses. And people working from home and sharing households means they need more bedrooms.
Yep.
And if you take a look at the difference between that unit, if it were a 2-bedroom to a 3-bedroom, I think you'd be surprised at how much of your capital you would need to make it a 3-bedroom versus how much you would return. I think you'd be shocked.
Yeah. Well, and the other factor I think is how many people ended up working from home full time, right?
Correct. That's permanent. I mean,
Yeah. So
I
now they
believe
need
is-
that extra office space.
Correct.
Yeah. You don't want to work at the kitchen
So
table.
if the deal doesn't work as you see it today,
Yeah.
what if you added
What
a
if you had a
bedroom?
bedroom? That's good.
What if you had 2 bedrooms? And run those numbers again and see if the deal doesn't work.
Love it.
Yeah.
Good tip.
Yeah.
Good tip. Well, Dan, thanks for being here.
My
Appreciate
pleasure.
all the insights and the
Of course.
tips and everything, and hopefully everybody else listening found them helpful. And
I do. I hope so.
thanks for being a partner in my business and for all that you do. We appreciate it.
Ben, we appreciate you too.
Awesome.